finished getting started. Fantastic. Welcome to this live Ask Me Anything About Property Investing with myself, Saj Hussain. I'm here every Monday evening at 8:30 to answer your property investing questions. So do I know everything there is to know about property? Look, absolutely not. Huge amount of knowledge and experience that I'm very happy to share with you. I've been investing in property for about 15 years now. And during that time, I've done many different strategies. Not everything's been hugely successful. There's some things I've learned, let's say, the very painful way, but nevertheless, it's been a learning. So happy to share that with you, ultimately here to help you get further faster in your property investing journey. So we broadcast live on various different platforms, on YouTube, Facebook, LinkedIn, Instagram, Twitter, and Clubhouse for the first time. We're also live there. So if you're watching on Clubhouse, so welcome. On Clubhouse, it'll be a listen only because we can't run all the tech at the same time, unfortunately. So if you've got a question that you want to ask, just pop it on one of the other platforms, which is Facebook, LinkedIn, YouTube, Instagram, wherever you'd like to. Pop a question in the comment section, and we'll do our very best to go through those and get those answered. Now, we're probably not going to be able to answer every question that we get this evening because it's pretty much the same case every week. We'll get as many of them done as we possibly can, and just get your question put into the comment section. As I said, we'll do our very best to get it answered. So with some interesting times right now, Boris has just finished his announcement effectively of another version of a lockdown that we're going into. We've got to think about how it might affect us in the property market as well. Haven't really heard all the details just yet, but certainly something we need to be mindful of in terms of the changes that are happening. So let's get our first question up on screen first of all before we get started. So our first question is on YouTube from Sagan. Hi Saj, Happy New Year. Happy New Year to you too, Sagan. Do you think the more rooms in a property, the merrier for service accommodation, either corporate let or contractors? Think which is better, 3-bed or 4-bed house? So I guess ultimately this depends on a number of factors. Firstly, it's how you're pricing the rooms out. So when you're charging the rooms out, are you charging per room, per person? Because if you're charging per room, the more rooms you have, that means it means the more revenue you're going to generate. But if you're charging per person, then it might be you've got twin beds in the room, might be you've got single beds or single person per room. So ultimately, it's about working those figures out. How much is it that you're going to be able to generate? And often with HMOs, I know we're talking about service accommodation here, but with HMOs, when you get to 5, 6 rooms and 7, they generally tend to be profit because your fixed costs are covered. They're not changing very much. So rooms like 5 and 6 are all profit. So for example, on my HMOs, when I used to do my costings, the way I used to think about it is the first 2 rooms will cover the mortgage costs or the rent if it's a rent to rent. The 3rd room will cover my operational running costs, such as the utility bills, etc., etc. And the 4th room will be profit. So if I've got a 5th room or a 6th room, they all tend to be profit as well, which is why my favorite number in HMO rooms has been 6, because it means we can do it without planning permission, and it also means it's a nice profitable deal. Now, of course, that's changed in Birmingham because we've got Article 4 coming, so we need planning permission for all the properties we're doing. So when you're thinking about service accommodation, you need to again think about the numbers, how many people or how many rooms, how are you pricing it out, and also what type of property that you're going to be operating. So for example, let's say you've got 4 rooms and you've got 2 people in each of those rooms. That's 8 people. You also need to think about how that might affect planning as well in terms of what you're doing, depending on the use of the property and how you're doing that. So we've done service accommodation in our HMOs, but generally it tends to be like a corporate let where we provide the whole property to a company for them to use their staff in there, and we charge them a nightly rate for the number of rooms that we've got in the property, essentially no more than 6 people. So that way we're not breaching our licensing agreement as well. It's not breaching planning either. And the way it's being run, it's also really profitable. So that tends to be the way that we've run those. Hopefully that helps. Let's get our next question up on the screen. So next question is from Jamie. Hi Saj, HMOs in Article 4 areas with a license but without planning permission. We can get planning permission even if the property is in an already dense HMO area. All the best for 2021. So let me just reread that question, make sure I've understood it. HMOs in Article 4 area with a license but without planning permission. Can we get planning? Okay, thank you for that question, Jamie. So let's assume it's Birmingham because we've got, so we can apply those things that you mentioned. So let's say we find a property that's got a license for a HMO. Let's assume it's 6 rooms, it's a license for, 6 people. and it's got no planning permission. So then we've got to look at when it is that that license was issued, how long has it been running as a HMO. So in Birmingham, in June 2020, Article 4 rolled out citywide. That means after that point, if you're creating a HMO, you need to get planning permission. So if the license was already in place for that property, let's say the license was issued in January or the year before, that means it was already an operational HMO. So we should already were HMOs before the June cutoff point. It means that they don't require planning. They're existing HMOs. It's only new ones that would require it. But on the other hand, let's say the license was issued or the application was made after June. Let's say it was in July, the application was made for a license. So that means you would also need to apply for planning. Now, if you're in an area where there is a dense number of HMOs, you might find it's difficult to get planning approval. I suspect licensing will also highlight the fact that you need a planning application as well. It just may mean it hasn't been processed fully. With Birmingham, typically it can be a year from the point of application before you actually get the license. But as soon as you've made the application, you can continue to operate it as a HMO. So I hope that helps there. So those that are watching on Clubhouse or listening in rather on Clubhouse, if you've got a question to answer, you'll have to jump on the other platform. So ask it there, or if you just want to listen in, you can listen in on Clubhouse. Let's get the next question up on the screen. So next one's from Catherine on LinkedIn. Hi Saj, if I wanted to remove a wall in a leasehold flat to open up the living space, and if it's not a supported wall, you are meant to apply for freeholder to do so. But do they usually agree, or is there a charge and a fee to allow you if you do know? So essentially, when you're changing things around within a leasehold property, often you need to get the consent of the freeholder. So just as a clarification, what does that mean? Freeholder is the one that ultimately owns the building or the land that the building sits on, and the leaseholder has use of that building. Now, just because the way certain properties are designed, for example, apartments, often they're leasehold, they're not freehold, because freehold will also struggle to get planning permit. Freehold will struggle to get mortgages. So if you had a freehold apartment, Khalid, I think this camera keeps freezing, so maybe we'll just stick to this one over here. So with flats, often they're leasehold. If it was freehold, you wouldn't be able to get a mortgage on those. So that's the common way that you find properties. But it also then means that the freeholder has a degree of control of how that property is used. Now, it might be it's got a very long lease. It's 100 years, 200 years, 999 years. So you don't have to worry about the lease diminishing in terms of the number of years that are left on it. However, as I said, the freeholder still has control and say over what goes on. And now the freeholders can be independent companies that have the freehold, and it all depends on how they operate. Often the way they do operate, they would charge you a fee to move things around just to deal with the paperwork. Some are reasonable, some are exceptionally unreasonable because they know they've got you over a barrel and they can charge pretty much what they want if you're going to benefit from that sort of consent that they're giving you. So it's a very difficult question to answer in terms of how much they might charge or what would they would charge, because it's down to the individual company, that's the management company or the company holding that freehold, and what fees and rates that they want to charge for that. So I hope that helps you with that. Catherine, let's get our next question up on the screen. So our next question is from Rojan on YouTube. Hi Saj, Happy New Year to you. Happy New Year to you too, Rojan. Can you suggest, and from experience, what due diligence to do when it comes to screening potential tenants? I'm a big fan of your content and all the best for 2021. Thank you so much, Rojan. I think we've just recorded a video on finding the best tenants. So it should be on the YouTube channel within, I think, probably a week or so. But just to give you some tips, one of the things that we tend to do, because I involved in a number of letting agencies as well, and initially used to manage our own portfolio of tenants before setting up the agencies and then managing by the agencies. So the way we've done this is we've learned what we think is important as opposed to what's the traditional way, say, letting agents operate. So we've sort of learned what we think is the right way as opposed to just follow what everybody else is doing. Now, the most common thing tends to be you get a credit check, you get a reference from their current landlord, you get a reference from the employer, and if that's okay, they push ahead. What we tend to find is we want to know a little bit more about the individual. So a lot of this is about some questioning that you have of the individual, why they're looking to move, when they're looking to move, what's got them thinking about moving, what's important for them in terms of where they're looking to move to. Some of these things will really allow you to get into understanding your potential tenant, who they are, why they're moving, etc., etc. So, for example, if somebody needs to move very quickly, you want to understand why, and it might be that they've just been evicted from their last property, which is why they want to move. And if they've got evicted for non-payment of rent, maybe you should be cautious about taking them on. But some of this information you're not going to be able to extract on initial conversation. So one of the other things we like to do, which I wouldn't say we're unique, but very, very few people do this, is to request 3 months of bank statements. Now, those bank statements will should show you the income that they've told you that they're getting, so you can see 3 months of income come into the account. You should also be able to see that their rent is being paid every month as they said it is and the amount that they're saying they are. So it's a way of collaborating some of the information that they've said to you, i.e. the income, the rent, etc., etc. You're now able to check this against the bank statements to make sure that's correct. And if there's, if they're constantly overdrawn, there's direct debits being bounced, then, this gives you an idea how somebody manages their money. And the way the way I tend to think about this is, let's say someone's paying you £500 a month, and over a year, that's £6,000. If you're your tenant, essentially that's like £6,000 of credit you're going to give somebody. So you want to know that they've got the means to pay and that they've got a good history of paying. So this is just the payment side. Of course, you don't know how they live, how well they're going to look after the property, but that's one of the things that we do that we think is absolutely key in helping identify good tenants in terms of affordability, which is looking at their bank statements. The other thing you could do, which we don't do, but a friend of mine I learned this from does, what they will do is they go and meet the potential tenant in their current home. And the reason for that is, they tend to use an excuse about paperwork and meet them, etc. But really what they're doing is they're getting a feel for how is it that they live in that house? How well are they looking after that property? Because that's how your property is probably going to look when they move in as your tenant. So a few tips there for you, the kind of things you don't normally get from a letting agent, but I think it helps to get the right tenant. I was having a conversation with a friend of mine earlier today, Andrew Roberts, who runs a great property meet and also got a great YouTube channel as well. And we were talking specifically around managing tenants right now and minimizing your rent arrears. And it's about being fussy about who you put in the property in the first place. Many people make the mistake that they take the first person that comes along that can afford to pay and they just let them straight in. But it's not just about their affordability. You want to look at them overall as a tenant to make sure they're going to be a good tenant, a good fit if it's a shared house as well with the other tenants, and a good long-term bet for you. So I hope that helps, Rajan. I hope that you find that useful. So let's get our next question on the screen. So we're live on various different platforms right now: Facebook, YouTube, LinkedIn, Instagram, Twitter, and also Clubhouse as well. If you've got a question, put it on the platform that you're watching. If you're on Clubhouse and you're listening in, you'll only be able to listen in. And if you want to ask a question, jump on one of the other platforms to ask it there. So the next question is on YouTube from Gamblers Ruin. Hello, Saj. Happy New Year. Happy New Year to you too. Would you avoid investing in HMOs? Are you converting 3-bedroom houses into 5-6 all-ensuite HMOs in North East Midlands due to the low capital growth? So I guess the question really is, when you're purchasing HMOs, you're going to be getting 2 forms of income, as you are pretty much in most type of property investment. One is the rental income that you're getting from that property, which often isn't a huge amount, and then the capital growth that you're going to get over time, which generally tends to be significant based on kind of historically how house prices have gone. Every 7, 15 years, depending on which type of stats you look at, house prices might double. Are they going to double in the next 7, 10, 12, 15 years? Hey, look, we don't know. But one of the reasons we get involved in property because we see the long-term growth of property values in this country. So what that means is that we're fairly confident in the future it's going to worth significantly more than it is right now. So we get a payday right now in terms of rental profit, and then we get a payday at some point in the future in terms of higher value, whether we extract that value through a remortgage or we sell the property and we kind of cash in on that equity. So when we're running HMOs, one of the reasons, or the primary reason many people operate HMOs, is that they can get a better cash flow now. So they get a really good income now, as opposed to an okay income and then a big payday later on. So getting a great income now is really why we're doing HMOs. But sometimes it's trying to get that balance. So if I use Birmingham as an example, use Birmingham because that's where I live, this is where we operate our businesses as well. So in the north side of the city, i.e. North Birmingham, where our HMOs are, they tend to increase in value much slower because it's not as affluent, as desirable, where a lot of our HMOs are in the North Birmingham. They run really well, but the capital growth isn't really there. When we compare that to the South Birmingham, where it's much more affluent, the price are much more higher, and when there's an increase in prices, they increase much higher and faster as well, which means we get better capital growth. But then we end up paying a lot more for those properties. For the very same type of property, we'll pay a lot more money in South Birmingham than we will in North Birmingham. So this is where you've got to get a balance and decide which is going to be more important. Now, the ideal thing would be you get properties which is going to give you great income right now, which you haven't spent a huge amount to buy on, i.e. low capital values to start with, but also you're going to get an significant increase in the future and great cash flow right now. But that's quite tricky trying to get that balance. So the way we've done that, we've split the portfolio where we go for some cheaper value areas just for great income, and we go for some more expensive properties, which we're paying more for right now, but actually we know we're going to get better capital growth as well in the future. So that's how we've done that. In terms of what's right for you, ultimately you have to think about which is going to be more important for you. Now, just a little tip in terms of forcing up values, which is the other thing you can do. You can force the appreciation of a property. So for instance, you could take, let's say you are in one of the cheaper areas where you've got property, you make it a really good quality property, and you get planning permission to say run it for 7 people. So now you've changed the use and the classification of that property into sui generis 7-person HMO. So that in itself increases the value. So when you come to remortgage the property or where you come to sell it, it's going to much more likely to have a commercial valuation based on the income it's generating instead of the bricks and mortar value of that property. So it'd be treated more like a business, which means you're forcing the value up because the income is generating. That's another way to try and benefit from the capital increases in cheaper areas rather than just being able to get that in the more expensive areas. So I hope that helps. I hope that makes sense for you. So thank you so much for that question. Let's get the next question up on the screen. So the next question is on Facebook from Kaz. Hi Saj, following BJ announcement about lockdown, do you think viewings will still be allowed to go ahead? Kaz, great question. I haven't really got all the details just now, but if I think back to earlier last year in the first lockdown, viewings are really restricted to key workers and those that really needed to move, as opposed to general viewings, and less people were moving around as well. So I haven't really looked into the detail, yes, right now, but it probably is going to have an impact, and we need to be mindful of that. I just finished a call with my inner circle group, which is my mentoring group. I also have a call with them before I do this on a Monday evening. And in there we were talking about, look, you know, this year is going to have an amount of uncertainty. We're making plans right now. It's January, the beginning of the year, often people are doing their plans, and I did a planning video just a few days ago to help think ahead about the year and what we want to do. But the thing is, we can't plan for everything. We're not going to be able to control everything that happens. There's many things that's beyond our control. So it's important to make sure you've got a solid business and also have some room to be able to move a little bit, a plan B if things change, and how that would work. So for example, let's say you've got a void in a HMO, and a lockdown means you can't do any viewings. You've got to be able to absorb and carry that void for a period of time until we come out of lockdown. So this is what I mean about having alternative measures and not just be relying on the fact that, yes, I have minimal voids, I'll get somebody in straight away, but making sure you've got a little bit of cash around you to protect you in those situations. So Kaz, I hope that helps. Let's get the next question up on the screen. The next one's from Win Legacy on YouTube. Hi Saj, can you maximize rent with social housing strategy? How can you maximize rent with social housing strategy? What are the requirements for social housing? So it's a very broad question. So what I will do is I'll the second part to it and follow up to previous questions, Saj. What's the best ways to find social housing associations? So a few different questions there. So let me just talk a little bit about social housing generally. Now, this is an area we've only got involved in last year. Prior to that, we weren't really ever interested in getting involved in social housing. It's just professional lets, and primarily professional HMOs was our core business, and also service accommodation at the higher end of the market. That's really been our core business. But last year, just when the pandemic started, we started thinking about how can we make our business much more stronger and much more solid. And we started looking at alternative ways that we can utilize some of our properties and venture into slightly different strategies that we haven't done before, just to be able to spread our risk a little bit and not be completely dependent on one form of income. So hence we started looking at social housing. Now, when we talk about social housing, there's many sectors within social housing, but ultimately the way I think about it is that the person living at the property is not going to be paying you the rent from their own pocket. It's the government in some shape, form or another that's going to be ultimately paying for that person to live there, and that's how you're going to be receiving your income. So when we talk about the rates, the universal credit or the LHA rates, so somebody gets on universal credit, for example, when they get payments towards their housing, there are a few things that you can do to maximize that. One of the key things is to understand that those rates are paid based on what somebody's eligible for, as opposed to what it is that they are paying rent-wise. So let me see if I can put some context around that. Let's say they rent a two-bedroom house, a three-bedroom house from you. Let's start again. Let's say it's a two-bedroom house at £800. So they're paying you £800 for a two-bedroom house, because that's what you're charging and that's what they decide to take, and then that's what you're getting paid from their universal credit payments. However, it may be that their circumstances are such that they're actually entitled to a three-bedroom property. Now, even though it's only a two-bedroom property you've provided them, as long as they're happy living in that two-bedroom property, they're still entitled to the three-bedroom rate, which might be £900, for example. So you can get that higher rate. So this is one of the ways you can maximize the amount of money you can get. Now, it's finding the right mix of people or the right type of person for the house, rather than just because of the fact that somebody's on benefits that you're going to move them into the property. So that's one example. The other one, and one of the most common and popular ones right now, is, as for example, around supported living or assisted living, these type of models, where essentially the way I tend to think about these is now you're stepping outside the realms of being a property investor and landlord. It's a different type of business. The reason it's a different type of business, because yes, you're getting paid a certain amount for the accommodation. So as an investor and landlord, that's a bit that we're interested in. But then also you're getting paid additional payments, as often significant payments over and above that housing element, to provide some additional support and care for that individual. So this is why I say now we're stepping outside of the realms of property investor, stroke developer, landlord. We are now moving into providing support and care services, which is really a completely different business model. Now, I'm not saying you shouldn't do this. I'm just saying you should understand that it's a completely different business to investing in property. It just happens to be it's within the property space. So the way we've ventured into this is we've partnered up with the company where one of my mentees, in fact, is running a business where they're providing the support and care, and we're providing them the accommodation. We partner with them to be able to do this with them. So essentially what it means is we're providing the property, we're getting them all ready, we're meeting the requirements, putting all the certification in place. And what they're doing is they're working with the various housing associations and putting the right people in the property to maximize the income they can get. And we're doing a profit share with them. That's essentially how I've set it up, and that's how I'm using that. And depending on where you're based in the country, you'll find there's lots of different types of housing associations. Some of them will work with you directly, some of them won't. You have to work through other companies, i.e. you're further down the chain, as it were. This will just require a little bit of research depending on where you're based in the country. So I hope that makes sense. Let's get our next question up on the screen. So next one's on Instagram, which Khalid has kindly put up on the screen. Thank you very much for that. It's from RYC95. Hello, Saj. Hope all is well. Do you have a communal area in a HMO if the rooms each are required? If the rooms reach a required size, or do you need to have one regardless? So thank you for that great question there. Essentially, the question is around communal space within a HMO. Now, in Birmingham, if the bedrooms are, I think it's 10.5 square meters or 10 square meters, I can't remember the exact dimensions, but 10 square meters, then it means if all the bedrooms meet that requirement, you don't actually need to provide a lounge or living room for them. If some of the rooms are smaller, then you have to provide a communal space as well. So assuming in this question, what they're saying is all the rooms meet this high requirement, that they're all big enough to tick the box and you don't actually need a communal lounge. So that would be correct. You could get a license on that property. You could run it as a HMO. You don't need to use a communal space. However, what I would say is you have to think about the practicalities, the marketability, and the suitability of such accommodation. I know some people I've seen create HMOs, they get rid of their communal space, but the way they've designed the house, it doesn't really work so well because there isn't that social space for people to engage and connect and sit with each other, because sometimes people move into HMOs because they want to live with other people. But if you don't provide them the space to be able to do that, then they might struggle to actually let the rooms, and it means your voids are much longer. Sometimes you might not achieve the rents you thought you were going to achieve, so it doesn't really work. And I know some people do this in London, but London's a very different market from the rest of the country, so I'm not sure where you're based. But in London, often the case is because there's such a shortage of accommodation that people will compromise and take properties where you haven't got a communal space. Like in Birmingham, for example, yes, we do have some properties that don't have a communal space, but often they're usually compensated by having other things that are much nicer. So for example, the rooms might be much bigger, they might have their own TVs or sofa space, spacious desk, all within their room, which means really it's designed to attract people who are not really that interested in sharing and living with other people, although there is some aspect of sharing, but they've got most of what they need in their room. So it's not just from the licensing point of view that you need to consider, but also think about who is it that's going to be living in the property, what is it that they're going to want, and is it actually going to work for your target demographic? So hope that makes sense. So thank you for that on Instagram. Our next question is Mohis. My apologies if I pronounced that incorrectly. This is on YouTube. Hi Saj, Happy New Year. Happy New Year to you too. Thank you. How do you go about choosing tradesmen, and what tips can you give to ensure contract quotes are bulletproof? This is a great question, and this is something many people struggle with, including myself. I've struggled with this many, many times. And really, it's one of those areas where it's quite difficult to find good people to work with for the long term. I'm not saying they're not out there. There are lots of them, but often the really good contractors and tradespeople aren't that easy to tap into because they have no shortage of work. They're usually stacked up with plenty of work because they're very good at what they do. So where I would start with this is I'd look in my area to see who else is doing what. And I'd do lots of effective referral type of inquiries where I'd look to speak to people who've worked with somebody and they've had a good experience. Now, here's the thing. Just because, for example, you meet somebody who says, yes, they've worked with Fred was an amazing builder, they did a great job for them, it doesn't mean you're necessarily going to get the same experience. Sometimes it can just come down to personalities because people's expectations are different. Maybe you are much more particular about the detail. Maybe your contact who introduced you wasn't so much, and they let certain things slip because it wasn't that important to them. So it doesn't mean just because one person has a good experience that you will too. So what I like to do is to try them on small jobs first, which are not going to be that significant, just to get a feel for how they work. Unless, of course, it's a much bigger job, but then the process is a little bit different. Like, for example, when we're building our new houses, we kind of go out to tender, we'll talk to different builders, we'll talk to other developers they work with before we make a decision of who we want to work with. And of course, the financial stability and things, there's many, many different factors that go into that. But when you're doing, say, a single renovation, a small extension, a light refurbishment, or you're just looking for a great gas engineer even, then all these other things are less important. It's really about their reliability, their ability to be able to do the job really well, their attention to detail, managing their admin and accounting side, and billing correctly and on time. All these are the sort of things that are much more important for you. So I'd find other people. So some of the networking, although we're not running any property networking events right now, when we were running the property meeting and we have about 100 people every month come along to my monthly property meet, that was a great place to meet and network with other people. But there's still some online networking, some forums, Facebook groups that you can jump into and ask these sort of questions. Hey, I'm, this area, I'm looking for a gas engineer, electrician, or a contractor to do such and such job. Who would you suggest? Who do you recommend? And then go and meet those people, talk to other people they work for, get a feel for the kind of quality of job that they're doing, visit them while they're doing a project. If someone says to you, yes, I'm free, I'm actually going to be available from tomorrow, I can start work for you, I can do that 100 grand renovation for you. That for me will be concerning, because I think, well, if they're ready to take on a job that big, why aren't they planning ahead? Why haven't they already got work lined up? These are sort of things and questions that I would ask as well. And business networking meetings, you'd ask for referrals through there as well. The other thing you could do is look at the trade websites where you can find a builder, a contractor, or someone like that. There's many of these websites online, and look for, just to get a general feeling of quotes. Put some work out there, see what kind of prices that they're coming back on. What is it that they're suggesting that you need to be looking at in terms of a figure? So I hope that gives you a few ideas. I hope that makes sense. So for those that are watching, if you've got a question, make sure you put it on the platform that you're watching on. We live stream on various different platforms. We're on Facebook, YouTube, LinkedIn, Twitter, Instagram, Clubhouse as well. On Clubhouse, you can only listen in and not ask any questions because we can't run all the tech immediately to do that. So let's get our next question on the screen. So this will be our final question this evening because we're pretty much at the at time. This is on YouTube. It's from Phillips. Hi Saj, I've been binge watching your videos for a few days and they've been amazing. Well, first of all, thank you so much. Thank you for doing that. I have one question. When you send out direct to vendor letters, do you use your trading name or registered company name? So this is a great question. When you're sending letters directly to vendors or owners of a property, what type of branding do you effectively use? How do you come across to them? Personally, I think it's really important to go for you as an individual rather than claiming to be this huge enterprise or national organization and giving the impression that some huge business, because ultimately people do business with people they know, like, and trust. And what you want to be able to do is be able to engage with them, have a conversation, build some rapport, understand them, really learn more about what is it that's important for them if you're going to do business together. And then from that, you can be able to put a deal together. So I prefer not to go for the big names. I just tend to, my direct to vendor marketing tends to be very short and sweet. The reason for that is because ultimately, if you think about what is the purpose of that letter that you're sending out, the purpose of that letter is not to be able to sell the vendor on the idea that you're going to buy that property from them and this is how it's going to work and this is how you're going to structure it, and you can do all these fancy, amazing structures to be able to put that deal together. Ultimately, what you're looking for them to do and the purpose of that letter is that they pick up the phone and call you. So the outcome you're looking for and the one call to action is pick up the phone and call you. So this is why you should keep the letters, I believe, nice and short. And of course, you want to test these things by trialing a few different types and see what works really well for you, because there isn't no right and wrong. What I'm sharing with you is my experience of what I found that works. So I'd have a really short letter that says, I'm really interested in your property, or I'm desperately looking for a property on your street. Even if you're considering selling, please reach out to me, call me on this number. I'd really love to speak to you. That's a sort of letter I would do, and I'd follow it up as well with a very similar letter within a couple of weeks, just to try and keep that momentum. And if it's very targeted marketing you're doing, a specific type of properties or specific streets, then what I would do is I'd have a third letter as well that follows up on the initial one, because it just has more of an impact and increases your chance of somebody going to call you. Because if somebody, for example, saw the letter first time, they didn't quite ring you, if it's not for them, that's okay, it's not a problem. But if it is, but they haven't called and they may be sitting on the fence, you want to try and be able to capture those in the second and third letter. That's really the purpose of doing that. And that's how I'll do that. Thank you so much for binge watching. I hope you're finding the content useful. And if you are, make sure you subscribe to the channel. Most of the people that watch the YouTube channel actually are not subscribers, which is really strange. But if you do subscribe to the channel, it also helps me out as well. And because it means the content will reach more people, the more subscribers it has. And if you like the content, you engage, you put comments in, it just means that the YouTube algorithm will show it to more people. And it just means that all the effort I'm putting in is working because more people get to see it. So that just leaves me to say thank you all so much for watching. Whatever platform you're watching on this evening, remember I'm here every Monday at 8:30 to help you with your property investing questions. There's a number of videos that we have on YouTube, currently 3 a week that go out. So make sure you watch those. And if I can help in any other way, reach out on the social media platforms. Are you interested in investing with me, or you'd like some support via mentoring? Just reach out and let's see how we can help. Thank you so much for watching. I look forward to seeing you here again next Monday at 8:30 p.m. Thank you.